We have a market which is basically in the process of locking up, with saying that there's zero liquidity available in the London market of silver. This is upon us now, and we're going to find out in the next weeks how it resolves itself.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce silver Valcambi bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce gold Valcambi bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today is David Jensen, mining executive and precious metal analyst. David, thank you so much for joining us today.
Well, it's great to be with you, Elijah.
We really appreciate your time on such short notice here. You just wrote an article about the LBMA, the London silver market, and the funny things that are happening here. We're seeing a lot of backwardation, and it seems like they might also be running out of silver. What are you hearing on that front?
Well, I think that the Bloomberg article was quite telling, because usually they're not out in front of these things. They tend to report them at the very, very last second, although, many of us, yourself included, have been watching this stuff for decades. And I think the key here is that statement from that investment manager saying that there's no liquidity of silver available in the market. So the market is basically in a state of seizure, which one would expect when they're trading claims in the cash market for immediate ownership and immediate delivery of assets that aren't in existence, which the LBMA has done since it was created in 1987. So not surprising it's happened. It is surprising it took as long as it did to happen, but it's upon us now that we have a market which is basically in the process of locking up. And given that there's apparently billions of claims for billions of ounces, for silver, and hundreds of millions of ounces of gold that aren't held and segregated and available to market, this thing is quite remarkable to see.
Certainly. I mean, I think a lot of people have been talking about the massive outflows from these major exchanges, and there's been a lot of debate about, is it just changing hands and staying in the vault, or is it being taken off of the exchanges? But it seems like what you're saying is there's actually evidence to show that it is being taken off the exchanges here.
Some for sure. I mean, hundreds of millions of ounces have been drawn out of London. But it may just be that individuals who are holding some of these claims in the cash market for immediate ownership are saying, okay, I'd like to turn in this spot contract now, and I'll just take delivery and hold it in the London vaults, right? The leverage is so intense, and we don't know what the balance is between those two things of just requesting delivery or requesting delivery and removing it to other vaulted locations. But together, it's enough that the market is seizing up. And as I said, it's quite remarkable to see.
Now, where do we go from here, in your opinion, in the next couple of weeks? Obviously, this week we just, yesterday, we're recording this on Saturday here, October 11th, but yesterday we had the first ever weekly close above $50 an ounce, that critical level. That's almost like, as Dr. Mark Thornton yesterday pointed out, it's a psychological level, right, for a lot of traders. Your perspective on where we head from here in the coming weeks?
Well, the lease rate has gone over 100%. We know that. And I've seen one statement from a bullion company that it was actually 200% at the end of last week to borrow silver on an annualized basis. So, I mean, suffice it to say, these are uncharted waters, and very, very difficult, Elijah, to say exactly where this goes. It's I mean, the amount of standing claims in that market, it is set up to unravel very quickly as it is. And the real concern ultimately is a knock-on into the gold market, which has this very same problem that the silver market does. There's just more liquidity there in terms of central banks lending the metal into the market to keep it liquid and flowing. But in the end, it ends up knocking on into the bond market, right? Because we saw in the 1970s when gold and silver prices ran, there was a selling of bonds and buying of these metals, and we could see a situation where we start seeing a surge in the yields in the long bonds especially. And, given that there's over $300 trillion of debt globally, it has real meaning and will have real impact on the speculative debt bubble economy that's been created by these central banks over the decades.
And you mentioned in the article that many are saying that this outflow from London is due to Indian demand for silver or other factors, or kind of like a Hunt Brothers squeeze. But in right now, what you think is happening is it's really a reaction to central bank monetary expansion, right? The inflation that might be ahead, the price inflation that might be ahead. Can you contrast that from what the mainstream is saying to the reasons why you think that people are taking silver off the exchanges today?
Well, I mean, we don't see data from India showing that it has a material effect, right? In fact, we can see a declining demand from the Indian market. And what we do know is that enough individuals, whether they're traders or investment funds, are asking for delivery of the metal. And given the extraordinary setup of leverage in the market, it's enough to start breaking the market. So we did see after September 17th, when the Fed announced that they were lowering interest rates, they're embarking on that again to start a series of lower interest rate pegs in the overnight rate that they set. That after that, the 10 and the 20 and 30-year treasuries started to tick up in terms of the rates on those. So they started to sell off after that announcement. How do you justify additional debt and additional liquidity in terms of currency in the market when your stock markets are already at all-time highs and inflation was at 2.9% and ticking up, well away from their 2% air quotes target rate? In reality, that's probably more like 5% in terms of the actual rise of the cost of living and goods in the economy. But suffice it to say that nowhere near their target and it unjustified. So, we're starting to see people step out of currency and step out on interest rate sensitive assets and buying things that are safe havens, such as gold and silver. But I think you'll start seeing knock on into oil and copper and foodstuffs as well, coffee, et cetera, over time. And what we'll see then, Elijah, is that these decades of loose monetary policy and currency inflation by the central banks that was temporarily parked in asset inflation is going to wash out into real assets, and then we'll see the real level of inflation by central banks. Historically, inflation was defined as an increase in the money stock or the money that's outstanding, or the currency outstanding. Really, it's not money. But that was ignored, and it was called beneficial inflation in air quotes for decades by the central bankers, and it was nothing of the sort. So there's a reckoning now that's arriving at us, at our doorstep, and only possible because of the reckless monetary currency policy by these central planners at the central banks.
Now, when it comes to, people are rushing towards silver, I think, for that monetary demand. One of the things that I've seen just in the last few weeks is a huge increase in the premiums on the wholesale and retail side for silver eagles and also gold eagles. But I think silver eagles is very key because typically what you see is in these kinds of bull markets, people rush towards gold first, and then they rush towards silver. And the fact that people are wanting the US coins, the Silver Eagle coins, makes me think that it's really monetary demand. It's a loss of confidence in the US dollar. People are wanting something recognizable that, who knows, maybe they could use as barter in the future. But it really does seem like people are moving towards silver as a monetary asset.
Yeah, and the compounding issue there is the fact that the U.S. Mint is producing silver eagles at 20% of the rate that they were last year. So that is, running head on into increasing demand, and it's no surprise that you're seeing an increase in the premia. We've also got word from metals dealers if they can't get 10 and 100 ounce bars out of the Royal Canadian Mint. The Royal Mint in the UK is only selling 1 ounce silver coins. They've stopped selling any larger denomination bullion bars like a 10 or 100 ounce or half kilo and kilo bars of silver. And the Australian, the Perth Mint in Australia, which is the de facto national mint, it has totally stopped selling any silver products at all. So we're seeing 4 major mints around the world showing signs of the distressed nature of the silver market, and it's a very real effect in the market, and there's no way to address it other than allowing enormous moves higher, I believe, in the price of silver to allow the market to clear. Now, the issue with that is if there's billions of ounces of silver sold into the London market, and the bullion banks are net short 220 million ounces plus or minus in the COMEX, that this has real effect on the balance sheet of these institutions. So if you start adding zeros to the price, you're going to start seeing some of these financial institutions rolling belly up in the market. So it's quite remarkable to watch all of this happening.
It certainly is. I mean, I think the mainstream narrative there with respect to the short positions of a lot of these major banks is they claim that, well, they're only hedging client positions, right? So they're net neutral. What is your perspective? What is your response to that?
Well, I have to hark back to Jeff Curry from Goldman Sachs's comments there in 2021 that the SLV ETF was selling client silver that's owned by shareholders into the market and creating claims against it. So they would buy it and vault it and then sell claims against it to artificially increase the apparent silver market liquidity. And, the whole issue there about JP Morgan selling claims into the market and saying that they were running a balanced book, for their clients. Well, my question is was JP Morgan selling claims? Were they the facilitator of selling claims against the iShares ETF because they were they were the vaulter of the silver for the SLV ETF, right? So a lot of it we're going to find out with time, but we'll know more with what happens. But Blythe Masters, who is running the commodities division of JP Morgan, she claimed that they were only facilitating claims for their clients so that they could hedge their book. And my question is that you're the primary vaulter of silver for SLV, and were you effectively allowing them to create claims against the hundreds of millions of ounces that they held for their shareholders? So we'll find out with time, but it's there's a lot of question marks out there given what's gone on in London.
Certainly. I think, as you mentioned, with London seemingly possibly running out of silver, the only cure for this is higher prices, and we'll certainly see how that plays out. I mean, do you see any other solution for the LBMA at this point? I mean, or does it just signal that we need higher prices from here to get the physical silver?
Yeah, you need to have materially higher prices to liquefy the market again. There's 25 billion ounces. There's been 50 million ounces mined throughout history, of which 25 billion ounces is outside of garbage dumps, and it's in electronics and solar panels and jewelry and silverware, et cetera, et cetera. So 25 billion ounces is a lot of material, but it's not in the 1,000 ounce bars of the correct purity that allow them to be delivered into the exchanges. And the market rate now is indicating that they are not willing to let adequate silver go onto the exchanges at the current price. So the solution for high prices is high prices, and that will bring the liquidity back to the market and allow the system to clear. The issue is, are we going to see bullion banks start to blow up, and what are the consequences of that?
Now, you mentioned in the article that soon we could see similar issues in London with gold. What is your perspective on that?
Well, the central banks, they hold hundreds of millions of ounces of gold, and there's a material amount of it that's vaulted at the Bank of England in London, and they've shown a role, but they've had a role over the decades of intervening in the market and basically attenuating any kind of price move in gold by lending market or gold into the market, to reduce the price excursions. So eventually, I think much of the central bank gold that's been leased into the market by the Bank of England is not going to be able to be secured to be returned because we're ultimately heading to a currency crisis. And when that happens, is people are unwilling to give up their gold for fiat, as we saw in the Weimar Republic and in other currency crises. In the end, it becomes unobtainable for fiat. And I think that's where these central banks are going to be caught out and are going to find that they can't recover their own gold that's been lent out into the market. So we'll see how it develops. The question is, how much time does it take, and how gradual is it, or is it a kind of a step change in the markets with disruption? So far, it looks like it's a step change that's happening in the silver market. And with saying that there's zero liquidity available in the London market of silver, this is upon us now, and we're going to find out in the next weeks how it resolves itself.
No, some technical analysts have been talking about, are saying, based on chart patterns and based on, like the RSI indicator and all those things, that we are a bit overbought at the moment, and that caution is warranted with respect to, the price. Your perspective on that? Because at some point, as you mentioned, if we went into a Weimar hyperinflation situation, maybe all those technical indicators could be flashing red, caution, everything, but everyone's just going to rush towards precious metals anyways, because the currency is losing value so dramatically. So those indicators might just kind of not work anymore. Do you think we're at a similar situation now, where some of those indicators that have worked in the past just won't work, or would you say that there is some likelihood of a major pullback coming?
Well, from my perspective, we've had decades of currency or monetary and inflation of creation of currency, and the loose monetary policy that central banks have run have temporarily sequestered the currency in asset markets. So whether it be the stock market or real estate, or any of the other financial instruments that are out there in terms of derivatives. But what we can see over time here is a relatively quick spike up in the price inflation rate as these assets roll out of these grossly inflated asset classes and start to roll into gold and silver as the ultimate safe haven monetary asset. So, there's already a term that's being bandied about in the press, and they're calling it a debasement trade, right? So it's investors see currency debasement coming, and as I say, it can be a very sudden showing up of the reduction in the buying power of currencies, because trillions upon trillions have been parked in asset classes such as stocks and real estate and derivatives, etc. And those asset classes acted as a repository for the currency, inflated currency, but they can give up just a small percentage, 1%, 2%, 3% of these asset classes can go into real assets such as silver and gold and start moving it up multiples in price. So we'll see how it rolls out. Nobody knows in advance, but the setup is definitely there for a very, very rapid increase in the price of gold and silver.
Well, it should be an interesting time. Again, just stressing that this Friday was the first ever weekly close for silver above the critical $50 level, and also gold above the $4,000 level. So we'll just have to see where we go from here. And it's been far too long since we had you on, so really appreciate your time today, David, and we'll have to get back with you soon. We'll put a link in the description of this video to your latest article on the LBMA. Are there any last thoughts you had for our viewers, and do you want to share with our viewers where the best places they can find you are?
Yeah, Jensen David, so JensenDavid.substack.com is where I post my thoughts on the market. And, I think the ultimate safe haven here in terms of financial assets is physical gold and silver directly in possession. And unfortunately for London, that is, it's the kryptonite for their promissory note market of creating artificial gold and silver with promissory notes. But, it's essential, I think, that people start thinking in the very short term about protecting themselves from upheaval, which naturally comes when you fix prices of assets as important as gold and silver, and with their implications for the bond market. As I said, the low interest rates and running interest rates from 19% in 1980 down to 0% for a decade. It was only possible while they shut off the warning system of gold and silver. And now we see the consequences of that.
I think it's just a reminder to our viewers that, this is kind of a situation, maybe not fully played out yet, but a big warning sign that ties us back to the saying, if you don't hold it, you don't own it. Because these promissory notes, who knows how long this system can keep running.
Yeah, exactly. I agree, Elijah.
Fantastic. Well, David, once again, thank you so much for your time today. You have a good rest of your weekend, and God bless.
Thanks, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce silver Valcambi bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce gold Valcambi bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.